So we've only got 3 modules left to complete. But these modules are probably the most important ones when it comes to building the business.
Mm-hmm.
I mean, they're all important, but without your market and your brand, everything else is, not going to give you the results that you need, right? So one of the things a lot of more professionals don't focus on is they don't focus on niche marketing. If you look at a lot of the advertising you see from a lot of more professionals, they deal with, it's very generic: first-time buyers, second mortgages, new to Canada, bad credit.
The whole works.
They cover every single thing, right? And each of those specific niches need a specific knowledge set and a particular approach to the client you're dealing with. Because, I mean, the first-time buyer and the new to Canada is a very different market. When you throw in the bad credit, there's a different market, you know what I mean? So there's a different learning curve that you have to get over to deal with those different markets. So I would more be inclined to have mortgage professionals develop high level of knowledge and competency in a particular niche. I'm not saying to ignore the other stuff.
Yeah.
But if you focus on the niche, you will find yourself having more success in the industry.
That makes sense to me.
And I go back to, again, when we first started back in the 90s, my niche at the time was first-time buyers, because we dealt within the Afro-Caribbean community, and everybody was in their 30s. They had good jobs, good businesses, and they were developing communities in parts of Brampton, parts of Durham, Ajaxton, Pickering. And the homes were affordable, between $130,000 to probably $220,000 was your higher price for a larger detached home. So many couples, young couples, were making, $100,000+ a year combined income, qualified very easily. And there were many programs in place at the time. You had cashback mortgages, you had 4-year amortizations, credit unions out in other parts of the country that lended in Toronto that had very favorable lending guidelines when it came to credit blimps. So if you had a collection with a cell phone company or a gym, they would ignore those things, right?
Yeah.
So it was very easy to deal with the first-time buy. And then you push the timeline a little further along, get around 2004, and the banks, the government started to make changes. The amortization started to pull down a bit, from 40 to 35 years. The down payment got a little more stringent. They wanted large down payments in many files. Credit score requirements started to increase. So with a 580 credit score, the insurers weren't interested in you, had left like around 650. So your first-time buyer pool shrunk. But no, remember, we had all these first-time buyers we did 3 and 5 years previously, right?
Yeah.
A lot of them were doing one of two things. Either they wanted to renovate their home. Can you buy a builder home because very basic? And they wanted to do the kitchen, they want to put on hardwood floors. A lot of folks were refinancing their mortgages. So we started to shift our focus on doing refinances. The refinance market is quite different from first-time buyer market. There are different guidelines.
Yeah.
Different lending guidelines that are completely different. So we have to learn that market. And as you go down the timeline even further, the economy fell apart in 2007, 2008, across North America. People were now in debt. people can qualify for prime mortgages. So what we have to learn now is alternative financing. And you start to deal with your B lenders, your non-bank lenders, your MCAP, your home trust, your haven tree. So that's a different niche altogether, right? So your niche is not going to remain the same through your entire journey, or might not. I shouldn't say should not, might not remain the same. But any given time while you're doing your business, you will find yourself focusing on a particular type of client most of the time, particularly if you are competent. Because what will happen is you get referrals.
That makes sense.
From that same gene pool. If you're doing 5 to 10 deals a month, and you deal with a lot of refinances, clients who've had challenges, they've gone to their bank and they've been declined. Those individuals have their own circle of influence. So when they are sharing a conversation of how they've dealt with their challenges, whose name comes up?
Yeah.
Your niche is not immovable. It's not, it's not the same place all the time. As the market evolves, it pivots. And you're learning. So that's why the continuous learning in this industry is so very important. Right? Because the market is constantly evolving. So I'm going to define the term niche as defined by the academics. A niche is a place, a position that's particularly appropriate to someone or something, especially due to being extremely specific and different from others. Niche often refers to a position or interest that allows someone or something to thrive in a particular environment. And the source there is dictionary.com. The key word there's two words in that thing. One is the niche and one is thrive, right? Those are your two most important words. And if you find yourself in the right niche, you will thrive. I mean, I was following a page a few days, for a while now, of a mortgage professional who only focuses on clients who are going through a divorce. Now, I don't know what the exact stats are for divorces in North America. It's probably like 7 out of 10 marriages end in divorce. I don't know if that number is correct. Don't quote me.
I'm sure it is correct.
But think about it. If it's 7 out of 10 marriages end in divorce, think of the number of people who own property that they're trying to hold on to, either one of the spouses. And within Canada, we've got a very simple mortgage refinance product that pays out the next spouse and goes up to 95% of the property value. Right? Most mortgage professionals don't know that. Most realtors don't know that. So they end up trying to sell the home and try to do all kinds of stuff. That's a very simple process. But if you don't know your product, you can't focus on the niche. So we go back again to, so everything interconnects. All the modules interconnect, right? If you don't understand a mortgage product, you can't focus on a niche market.
Yeah, you need to have
a broad-based knowledge, right? So there's this complete interconnectivity of what we do. And this we look back to how we started our module. We started off with understanding real estate and mortgages in relation to the overall economy. You can't look at a mortgage product in isolation of what's happening in the economy, right? Everybody's worried today about how the market is so hot. But the market is hot, not because of low rates today or the pandemic. The market is hot because the federal and provincial governments never had any plan in place from 25 years ago how to build affordable housing. That's what the market is hot today.
I get what you're saying.
That's what I'm saying to you, right? Everybody's focusing, there's no inventory. No, that's not the reason. The reason there's no inventory because there's never been a government program to build low-income housing for folks who want to buy them. It's a very simple answer, right? So, but I mean, to understand what we don't do successfully, you have to understand all the dynamics. When you're in front of a client and they, making assumptions and making these statements that have no bearing on logical reality, you can correct them and advise them. And that's where you become an authority on the subject of mortgages. that you can correct that person with some level of authority, and you can point out the reasons behind what you're saying to validate your statement and your position and your opinion, right? But if you aren't an authority, if you don't understand your market, you don't understand the product, then it's very difficult to do that, right? If you're struggling in the mortgage business or relatively new to the field of mortgage financing, you might want to consider changing your marketing tactics and concentrating on a specific niche. Niche marketing is quite simply the process of concentrating on a specific segment of the market rather than the entire market. And you're probably asking yourself, well, that would probably reduce the number of people I come into contact with and limit the number of loans that you do. Actually, it's the converse. You will meet less people possibly, but your closing ratio will probably increase.
Which in turn brings up your income.
Brings up your revenue. So instead of talking to 20 people who are trying to do multiple of this person is doing construction financing, they have limited resources, they don't own the land. You spend 2 weeks chasing that transaction. This person is trying to buy a house, they're trying to get a gift from their grandmother, they've got cash in the bag somewhere, the credit score is on the borderline, the income barely fits. The deal is not going no place.
No.
Focusing on guys who have owned the house for 5 or 10 years and they want to do their basements. All they want is second mortgages, $100,000 to their basement. And you can do 2 of those a week and charge them. So your focus is different. I mean, you become the authority. You've got your whole team around you. You have your contact who can get the permits for the basement. You have your construction crew who you can refer to and say, listen, this person is in East Durham. They want a basement done. This is their budget. You've got everything in place. You know what I mean? You've got your mix you deal with. You've got your first lenders you deal with. You've got your appraisers who go out there and get your appraisals done very quickly in different parts of the city. That's a niche. That's how you focus on building a niche. Or you deal with guys who are self-employed. So
that makes sense.
You deal with a bank statement product, and you know exactly how to put together. Because the way Cable Tree does their bank statement product, and Home Trust does theirs, and IC Savings does this, is completely different. So it's the same product, but the way they do it is quite different. So if you focus on the bank statement product and guys who are self-employed, you know who your 3 go-to lenders are. You have your templates. When the client brings you the stuff, his documentation, you know exactly if the client has certain limitations in what he can give to you, you know which lender you're going to be able to send the deal to, as opposed to wasting another lender's time. That comes back again, the relationship with your lender relationship. You're talking to your BDMs. If you look at it, every single module is important. The whole process is important. Because if you and your BDMs have a good relationship, or with your lenders, then you have a difficult time getting your business done because you don't know who to send the deals to. Right?
Yeah.
What a lot of people do is they do these broad marketing campaigns. And you can spend a lot of money doing marketing that is too broad, where you come across as an authority on every subject in the mortgage industry. And your results will be very limited. So if you do a print ad in one of the local newspapers, there's the Mississauga News or the Brampton Guardian, and your ad says first-time buyers, bad credit, new to Canada, second mortgages, construction loans. It says everything, right? Best rates offered. But it's not specific.
Yeah.
You may get 100 phone calls a day, but what are those calls for? Are they the bad credit calls? Are they the first-time buyer calls? You know, so it's a numbers game, and you spend your entire day answering the phone, talking to people who you can't really help because you haven't really been specific on what your offer is to your audience. Now, if your audience is very, very simple, if your ad is very simple, and very specific, want to renovate your basement for rental purposes, we offer financing for that process. First or second mortgages based on your circumstances. So the only person we call you at this point in time is a person who, 1, owns a house, right? 2, wants to do their basement, and that makes your process a lot easier.
Yeah, the conversation is a lot easier.
It's the same conversation you're having with all those 100 people. Like, if you don't own a house, you can't do your basement. Right? So, and that's where the focus comes back, or you focus on self-employed. And you'll be very specific in your marketing. Have you owned a business for 2 years or more and want to buy your first home? Call us.
You immediately eliminated the one that just opened up the business.
There you go. 2 years or longer. Right? Are you a homeowner who filed bankruptcy and just got discharged? Again, very specific, right? Because the bankruptcy process usually lasts 2 years. If you're a homeowner and file bankruptcy, that means most likely if you own that home for at least 5 years. But you don't buy a house and file bankruptcy the next day, right? There's a series of events in the bankruptcy situation. So if you have just been discharged, that process to bankruptcy is a 2-year process. And the process to get into bankruptcy might take you a year before your credit gets messed up. If you're a homeowner, I am gambling on the fact that you probably had this house for 5 years or longer. So therefore, I have a solution for you, right? Very specific. So your audience is narrowed down. You're not just throwing, darts at a random wall and hoping that something comes back. So regardless of how you do your marketing, whether you do it in social media or direct mail, or you're cold calling clients, or you're doing seminars, it's very, very specific, right? Even with a seminar, right? You want to focus, like, we did seminar to focus only on condo buyers, right? Because there's so much misinformation about buying condominiums, and the guidelines on what you can do in a condo, that people just say, oh, I don't want to live in a condominium. But for some people, it might be the best choice to live in a condominium based on your personal circumstances, right? But if you don't understand what the guidelines are, how the condo corp works, and all the other, how the financing works, and that kind of stuff, then you find yourself in the market. You find yourself just randomly trying to, do any kind of deal, right? Niche marketing is probably the most effective way to break through the tons of competing mortgage marketing material and be heard by your target customer. Developing a good marketing niche where you can clearly stand out from the rest and then concentrate on your niche, become an expert, and you'll become widely known and revered, and you'll be sought out continually for the knowledge you possess.
That makes a lot of sense.
95% of our business is someone picking the phone and calling us. Now, we've got a lot of years in the game, so that's the reason also. But our business is not random, right?
Yeah, there's a structure.
There's a structure to it. And yes, we can do construction financing, and we can do a lot of stuff, but we haven't really done that, right? We are focused on a very small community, mostly within the Afro-Caribbean and the Indo-Canadian Guyanese communities. We focus mostly on guys who are self-employed or clients who are overextended with their credit, and we give them a solution. And you'd be surprised. I mean, I remember last year when COVID first started, we had a client who wanted to do a refinance. So her credit score was like around, at the time it was around 620. She had a great job, worked for a major bank, and a great income. And she was at the time she was one of the major banks. Now this client, prior to that, when she bought the house, her credit score was 780, right? But she had a series of misfortunes. Her credit score dropped. She had a lot of outstanding debt, and she didn't want to do it. We suggested the best thing for her to do was do a second mortgage. Now, to some people, the second mortgage is taboo. It's like you just ask them to give you your firstborn. You know what I mean?
I'm glad you brought that up. I'm getting that conversation as if it's like a bad thing.
You have to sit in front of the client and show them numbers, right? So she had a mortgage probably around 600,000 was her first mortgage. She had $100,000 in debt. Now we could have done the deal for her through a B lender. So you look at the 1% fee, rate at 4.5%, and all that good stuff. And then you say, okay, if you do a second mortgage for 1 year at 10% with total fees of $6,000, the way the rates are trending today, it is highly possible that a year from the rates are going to be the same. But what is also important is that because your credit score being low is not based on delinquent payments, it's based on the fact that your usage is extremely high. So once you've paid off all this debt, in less than 30 days, your credit score will increase significantly. So the client, we showed her the numbers and we explained to her what the future process is going to be and how it's going to. And she said, okay, I'll do it. And she was adamant, she's never going to do a second mortgage. I mean, that conversation went on for probably about a month. You're going back and forth with emails. I brought her into the office, got out the flip chart, got out the marker, and went through all the numbers. So remember, people are very visual, right? And a lot of what we are telling them to do, they don't understand all the intricacies. So sometimes I'll use a piece of paper and a pencil or a marker and go through the different scenarios with them. And so they can make an informed decision. The client went home with all of our numbers and said, let me think of it over the weekend and I get back to you. I got an email next morning. We got an email, go ahead guys, order the appraisal, I'm gonna go for it. Fast forward 10 months later, we about to go back in and refinance the property and pay off the private mortgage. Our credit score jumped up, I think, to 822.
Whoa.
We pulled the credit report and she saw it. She couldn't believe her eyes. Because what we were telling her didn't make sense to her because she never heard about this before. She didn't understand how the whole credit thing works.
She's just living her life.
Yeah, she wrote a review for us on our online profiles, explaining what we did for her. So a year later, she's now gone from, she paid off the mortgage payoff penalty on her rate is down to like 1.8%. And we showed her how much savings she will have now going forward. So the short-term pain has allowed her to regroup and go forward in a meaningful way. Right? But if you don't focus on a niche market, and you don't understand how credit profile works and how fast that credit score can change, you haven't done those deep. So we've seen it ourselves, right? We've paid off clients' debt, and 2 months later, the credit score is up 120 points. So we know it works, right? But if that's not your market, you can't stand there very confident and tell a client, your credit score is going to increase by 100 points once you pay off these 3 credit cards. Don't close them, just pay them off.
Mm-hmm.
Unless you see it, you can't tell a client that.
Correct.
You can't sit there confidently because the client sitting across from you, they're feeling your energy. If you're not confident in what you're saying, your presentation to them, what you recommended, they're not going to listen to you.
No, they have no reason to.
No, right? So, and that's why that's one of the benefits of focusing on niche markets. So whether it's construction financing, you understand the entire process. You understand how the lenders will look at your situation based on whether the land is owned free and clear, whether it's financed, whether there's an investor involved, where the property is located, size of the home, all that stuff. But if you're not doing construction financing frequently, then you're going to stumble through that process. And what will take you a day to put together, of gathering the information and having lenders who will look at the file, will take you weeks. So your closing ratio gets stretched out. Your efficiency ratios are not high enough. You're going back and forth with the client. There's a lot of miscommunication. You don't have half the information you need. You know what I mean? So by focusing on niche, you know exactly what you need for a particular file, right?
You become more of a helper instead of just you become more valuable to the client and yourself.
Very valuable. And so there you go. What is your value proposition? You become an expert in a particular field, right? So as simple as the mortgage process is, it can become quite complex, particularly for young or new mortgage professionals, trying to find their way through a maze of products and client situations. As a result, many find themselves focused on a particular type of client or a particular type of client situation. This can be both detrimental or beneficial to building a successful mortgage business. And we did mention the shortcomings of that. Why could it be detrimental? The real estate market and the mortgage markets are constantly evolving. It's not static. So things are changing. The economy is changing. There's things happening all the time. So as those things change, the interest of what people are doing will change. I mean, what's happening right now in the GTA? There's a lot of clients are selling their houses in Toronto and moving to cottage country.
Yes.
So financing a house in Toronto and a house in cottage country is a very different process, right? Is the place on well and septic? Is it on an all-year access road? How is it being heated? Is it by propane or is there an oil tank in the ground outside? Do you need to get a water potability test? You see right there, how much is that called off for you right there off the top of my head?
Yeah.
So if you haven't done cottage financing and your client sells their home and comes to you with an offer, and you think you're just going to go to a bank and get it approved in 5 minutes,
Yeah, you have
it might not be that simple because they're going to try to ask you for stuff, that you have no idea what they're talking about. And the client doesn't know either because this client has lived in Toronto all their life. They've never owned a cottage. They've never even gone to a cottage probably. But it sounds nice. Okay, I'm going to leave Toronto, leave the pandemic behind me, and go and buy a nice waterfront property, right? So before the client does that, if the client comes to you for advice, you can tell the client, listen, buying a cottage is very different from buying a house in the GTA. Here are a few things you want to make sure that your cottage has before you can make an offer. And one of the things, the list of criteria is very simple. Make sure that your cottage is in a certain distance from a major urban center with a population of at least 10,000 people. That's one of the first criteria. The next one is the heating. What kind of heating do you have? People are reluctant to wood stove. The lenders are reluctant to finance properties that have wood burning stoves. That's not a real heating source, right? Accessibility. You get this property on an all year round road, or when it snows, you can't get home, right? Those are the kind of things you have to look at.
There's so much intricacies beyond that you have a cottage.
Yeah, very different, right? Economic variables can significantly impact your target client and negatively impact your business. You go into a recession, if you're only focusing on guys who are working in a certain sector, then if the economy contracts in that area, then you will see your business fall off significantly, right?
And then you endanger the lender.
You're in danger, yeah. You're in danger, right? Same with the global crisis. We go back to 2007, 2008, and the markets fell apart. I mean, I had clients who had bought homes in parts of GTA, and they had bought homes at a certain price. And when they were ready to close, the appraisals came in significantly lower than what they had bought the home for, sometimes as much as 10 or 15% lower. And for those clients who bought premium lots, paid an extra $1,000 for a house lot because it backed onto a ravine, that value was not being honored by the banks. They said they saw no value in that premium lot. So a lot of clients had to find more money, go private, or lose their entire deposit. And we had clients who lost their entire deposit. Our business shrunk by 75%.
Holy.
During that crisis. Like all of our pre-approvals disappeared. We couldn't close. Right? Because that's when everybody was buying new. People were moving from their townhomes and their semi-detaches into larger homes. Because we had a large client base, we had all these move-up clients. Right? We had all these pre-approvals. We were closing all these deals every single year. And we just see all the pre-approvals being canceled. Right? What can also happen, you can stagnate your growth by losing part of your market. So if you only focus on a particular type of client, if the market changes, or you run into clients who are looking at a certain type of mortgage product, and you have no clue, then
you're in trouble.
You're in trouble. And in today's world of social media, that can lead to negative reviews also in your profile. But it calls you, you don't know what you're stumbling through your responses because you don't have no clue what you're talking about. That person, everybody knows keyboard happy, right? We call them thumb warriors. So they don't like the way you spoke to them or what you told them. They go online, you get a negative review, and that affects your business negatively, right? So it's important that you don't pigeonhole yourself. You keep your knowledge base wide, but when it comes to your niche, your marketing, you want to market in that manner. No, the other way to do it is that you do niche marketing, but you still have a general knowledge of all the products. So when you do your marketing focuses in your marketing doesn't overlap each other. So it's your brand where you do a particular ad for second mortgages, and then you do a different ad for first-time buyers. But you don't integrate the ads to save revenue, save spending, save money, and do one ad for first-time buyers and second mortgage in the same ad. Right? So you do it differently. And you still focus on your niche. Okay? What are the benefits? You become the authority in a specific client type, market, or type of mortgage, right? And again, I look at our journey. We went from first-time buyers to move-up buyers to refinancers to investors. And as you move along the continuum, you deal with the clients, your knowledge base continues to expand.
Correct.
So, many of our first-time buyers start to buy investment real estate. And that's a huge learning curve for many clients because if you buy a home, your rate is 1.89 or whatever the rates are today. When you buy an investment property, you have to now coach the client not to focus on interest rate, but on cash flow, right? And that sometimes can be a very, very difficult conversation because all they're focusing on is, well, I want a rate of 2% to my investment property. It might not be a bank deal. When I go to an alternative lender for any number of reasons, right? Because the bank may qualify you differently than an alternative lender. So you might get more money to an alternative lender than a bank on the same property. Albeit it's at a higher rate than probably the lender fee, but at the end of the day, the numbers are more beneficial to you, even at the higher rate than the lender fees. And that's where the spreadsheets and the numbers come in and working through it. So again, if you're a specialist in a certain niche, it allows you to make a difficult conversation very easy because you're knowledgeable. Right? Your referrals are very specific when you become a niche specialist. And we mentioned it earlier, if you're only dealing with a certain type of client, then your referrals are going to come from the same kind of people because you're having a conversation with their family and their friends and their workmates. You become that person.
Right.
So we became the bank decline guide for nurses. So nurses will go to the bank and they get declined because a lot of them work 2 jobs and they use their part-time income, and a lot of them, they have a different way of working sometimes. Look at a lot of immigrant nurses. And then we get a phone call. I've referred to you by so-and-so. You went to the bank, closing in a month. They bought a new house, so we can't get a mortgage. And so don't worry about it. You come look at the stuff. And usually it's a very simple transaction, right? That's how you put a deal together, right? And the good thing about dealing with clients who are nurses, most of them have good incomes. Right? Their incomes are among the higher incomes across the country. So it's an ideal client. So the more success you have dealing with them, you've got an ongoing pipeline of dealing with them. Right? When I first started out, I got a lot of school teachers. We had a lot of young teachers who were coming in, who were buying homes, right? Both white Canadians and non-white Canadians. And a lot of them were young, and their incomes were good. They just finished teachers' college at good incomes. Teachers don't move as often as most other people. They tend to stay in the same place because they tend to stay in the same school for a long period of time. So once that market saturated, we did do a lot of continuing business with a school teacher. But the nurses are totally different because that is one profession that continues to grow on an ongoing basis. One of the other benefits of a niche market is that you develop a seamless business model, because now you've got a process, as you mentioned earlier, right? Every deal follows the same. So you know exactly what documents to ask for. If a client is self-employed, it comes to you whether they want to buy or refinance. You know what to ask for. I need an ask for incorporation. I need 6 months banking statements, right? You know, I need a copy of your idea of your expenses. When you work out of a location, you work out of your home. You have staff. How much do you pay your staff? Are they subcontractors or are they employees? Are you paying source deductions for your clients? All that stuff. You have a business banking account. So it's a very simple template, right? But it makes it very easy to get from A to B without stumbling. Yeah. So, you know, I look at Stefan. When a client calls Stefan, he sends an email right after. And he asks for these 12 items. And he doesn't open the file for the client. He receives all those 12 items. It's a seamless process. You're not running around chasing a client. You're not asking a client for this item and then you go to the bank and say, oh, we need these things also. You know, if the client needs to refinance the existing mortgage, you want a copy of all your mortgage statements and a copy of the property tax bill. And if they got a private mortgage, you want a copy of the original mortgage commitment, because you want to see what it says. Like we're dealing with a transaction right now. The client has a second mortgage they want to consolidate. It's a $230,000 second mortgage at 10.45%. The mortgage payments are $600 a month. That makes no sense, because the interest on $200,000 at 10% is $2,000 a month, approximately. If you're only paying $600 a month in your current mortgage, then is there a back-end balloon interest on the back end? So is the payout going to be 235 or is it going to be 260? Right? So until we see the mortgage commitment, we're not going to proceed, because we don't want to put together a mortgage and end up at the lawyer's office and be short $70,000. So, yeah, so having a seamless business model allows us to do these things efficiently. Right? The more
you help everybody when everyone knows what they're doing, it just makes it easier. You have more value to the person.
Yeah, that's your value proposition. Your stock value goes through the roof because you're an authority in the thing, right? You're not wasting time. You know? You send the client an email, ask, request them what you want. You tell them don't send you any JPEGs, send you PDFs only, and they will figure it out. And you get a file, you can print all your documents and put them into a folder. Because maybe you have to send all the stuff to the lender also. So the more efficient you are in your request for documentation, the more efficient the client is in providing those documents to you. You can also send them to your lender, and the whole process becomes faster. So your turnaround is not faster. When you send a file to a lender that's properly packaged, all your docs up front, the lender is more relaxed, they're more comfortable, they're not stressed out. You've already given them what they need. So your responses are faster and usually more favorable, right? The other thing that's very important when you focus on a niche, they develop solid lender relationships. And that is one of the most important things to be a successful mortgage professional. Right? You get your deals done quicker and easier, which is what I just said a few moments ago. Right? If you're focusing on buyers who are self-employed, then you're dealing with a certain lender, you have all your documents, and you send it out to them. You know what their minimum credit requirements are, what all their criteria are, and it's very, very easy to get that process, your mortgage process approved quickly, right? But don't be afraid to pivot. So if your niche starts to dry up or slow down because of variables that you can't control, don't hold your head and say, you know what, my business is dying. You got to say, okay, you got to step back, relook at your marketing process, and attack another client base, right? Because the clients are out there. Right? You gotta evolve. The first time buyer becomes an investor, or they want to buy vacation homes, or they want to think of remigrating to other parts of the Caribbean, or parts of the Caribbean or other parts of North America. And if you know how to walk them through that process, you're constantly improving and increasing your value to your client, right? So, while the niche market takes a while to develop, once it's done effectively, it gives you a lot of success in this business. Outside of the niche market is your brand creation. And I know many more professionals are licensed under a brokerage. And what most of them do is get a business card with their photograph and the name of the brokers they work through. And they say, on the back tells us whatever your tagline is. We do first and second mortgages, we do first time buyers, new immigrants, like the usual stuff. The very everybody's doing the exact same thing, right? Everybody got the same process. The business cards all look alike. They're the same quality. They got the exact same font. Nothing is different about them, right? So you have no brand. You have no presence. Right? How do you stand out and make someone want to call you? Because people like what is different. If you look at all the big brands, you look at all the successful brands, right? They've got something that catches your attention, whether it's a car, whether it's clothing. It's usually something, or electronics, that catches your attention. They've got a brand that is not just blending with everybody else. The one brand I like to refer to all the time is McDonald's, right? They've got those golden arches. So anywhere you go in the world, regardless what language they speak, you recognize the McDonald's logo. Often they know exactly what their menu is because it's a global menu. When you look at the cars, you see those 4 circles interlocking. It's Audi.
Yeah.
You can't miss it. You know what I mean? You know exactly what it is, right? The Nissan logo, certain brands, that are very specific. The Gucci logo, right? So these companies spend a lot of money on their brand creation. Now, does it mean that their product is any better than a person who is selling something else, the same product without all the branding? I don't know, right? But what we do know, when you think of certain things, the brand comes to you immediately. If you're hungry, you want to find a quick fast food place, you think of Tim Hortons or McDonald's. But they're always in your face, right? There's other coffee shops in the GTA, but we think of those 2 things right away, right? The brand creation of your marketing approach is critical and important to you standing out in any industry, but even more so in the mortgage and real estate industry, where much of the players are just regurgitating the same thing. If you go through social media or you go through anything, or you see everybody's doing the exact same thing.
Yeah,
right? Sharing the same information. They're not telling you, there's no content marketing that really stands out and let you know, okay, this person is different, right? So over the last little while, we've moved from print to digital content, right? So it's now less expensive to create a brand because you aren't printing stuff anymore. If you're doing print marketing, it gets very expensive, right? So if you're printing brochures and flyers and newsletters and doing mailouts, that's a costly process. You're printing, probably 500 items every 3 months to every month, 3 months, and you're spending thousands of dollars. Now in today's market, most of us have a digital presence, right? We're either using one of the digital platforms or a website, or we're using a blog. And that's where we create our brand. So your marketing costs creating that brand has dropped significantly. Like, okay, I share with you our brand creation. So we do our brochures that probably cost us about 30 cents a piece. So if you print 500 of those brochures, I don't know what was that, probably $1,500 or whatever the case is.
Yeah.
Around there. My math's a little off right now. But the point I'm trying to make to you, we can now have that same brochure done digitally to share on social media. It takes a graphic artist 20 minutes to do it. You charge us $60 an hour, we get a bill for 45 bucks.
Yeah, you can't go wrong.
So now I can now do different digital content every single week without breaking the bank. And have a much more effective penetration into my market, right? So, but the brand identity is very, very important. So you want to make sure when people see whatever you're putting out there, it's clearly branded. So what I tell more professionals, do not absorb the brokerage brand. Try and create your own brand that superimposes their brand. But in order to remain compliant, you put their brand in the background. So your Mortgage Alliance brand floats into the background. Your Jelani Daniel brand comes forward. So you create your own logo. You have your own direct numbers. You create an email address independent of the broker's email address. That's all part of your branding, right? You want to be distinct. You want to stand out. You want to be memorable. You want to have a visual impact, right? And it has to be flexible because remember, your business can evolve. So if you go from being a mortgage professional into a mortgage coach, you don't want to reinvent your brand. So if you had this brand that kept on saying ABC Mortgage Brokers, and you've gone from being a mortgage broker, becoming a team leader and coach, you might want that brand to represent that. So it's critical that the brand is built properly from the initial stages, right? Your colors are important. Having a specific logo is important. Those are things that you really, really want to focus when it comes to the brand, right? And it has to actually, your brand is you, right? If you're a happy person and you're very friendly and outgoing and you like going to the family, the clients' picnics and that kind of stuff, then, you want to brand yourself so people know that. If you're not that person, then you want a more sober brand. Then you want to make sure that the brand reflects who you are, right? There's a cost to brand creation. Usually we have to find someone who's professional, you choose your colors properly. So everything you do, it looks identical. So people now can recognize you. So you ask about your business card, they go to your website, they go to your Facebook page, they go to everything looks the same. So that's your brand. So there's no confusion who you are and what you do, right? Your bio is identical on all your platforms. Right? Your Google profile and your website has the same information. Right? Your contact information is exactly the same. The phone numbers are the same. Right? And that's what makes individuals step out. When you hand your business card, it looks very monolithic. It looks like every other business card you've got. You go to a marketing event or to any kind of seminar, you get 20 business cards. They all look the same.
Right.
You come back to your people, nothing stands out. If you look at the business card and it's different. It's got a design, it's got a logo, and there's a tagline. And a lot of people forget the tagline. That's an important part of your brand creation. Because you can have a company that's called ABC Consulting, but what are you consulting in? Are you an economist? Are you a digital consultant? Are you a communication specialist? Are you an IT specialist? I don't know what you do. And the word consult, the consultant phrase and the consultant is thrown around so regularly. Everybody's a consultant. Right?
Yeah.
So what are you consulting? You want specific. So JD Consulting, or the Daniel Mortgage Group, or the Daniel Group, mortgage professionals, mortgage consultants, right? Real estate and construction financing specialists. You know exactly what you do. When you look at your card, you finance real estate. You do commercial or residential. So the questions now are now limited. I look, people hand me the card, I look at the card, and I don't know what they do. You look at the business card, it's a nice card. People actually paid money, lots of money for it, got all this information, but I have no clue what this person does. And most of us are not going to call that person after you met him and says, "Hi, Joanne, how are you? What exactly do you do?" You know what I mean?
They give you anxiety.
That's you're going to have, right? So it's important that the brand we sit back, step back from what we're doing, and create our brand. Now, in the mortgage industry, the branding has to be specific and compliant. So there's certainly have to include in all your marketing that meets the provincial regulatory bodies. You have to include certain things. You have to make sure that those things are, because the last thing you want to spend thousands of dollars in your material, right? Or you build a huge website, but it's not compliant. So it's important to understand what the compliance requirements are. So when you put together your platform, everything there, you don't have anything missing. You can't get a call from Fiscal and your website is not compliant. We had those challenges because we were doing stuff in the Caribbean and Florida.
Yeah.
They were I get a regular phone call. Well, on your website, we're not licensed. That's not our jurisdiction. You can't advertise more in Jamaica or Grenada, right? So we stepped back from how we did our marketing, and we've got the license who are licensed under our group. Their marketing is compliant with the requirements of the regulatory bodies, and it's not a marketing arm, just as marketing. So it's more, I don't want to say generic, but it's sort of outside of the realm of just mortgages. So we do consulting company that focuses on a lot more. So the brand reflects that.
That makes sense.
And we're not sharing lender information that this lender is offering that and this lender is offering that. We just share.
Keeping it simple.
Very simple, right? But that has been very effective for us because clients know what we do and how long we've done it. So it makes.
I was glad. I'm glad that I signed up with you because every time we have a class, it's more or less the underbelly of the industry that you need to learn the